Hey everybody, welcome back to another edition of GCNC Worldview. We're in the middle of our Cannabis by the Numbers series, and it's been a pretty cool deep dive into sort of what's under the hood of the cannabis industry from a numbers perspective. And I'm really pleased to be able to welcome back Beau Whitney, who is the founder of Whitney Economics, Rachel Wright, who is the CEO of Verdant Strategies. We've had pretty good journey, you guys, getting a chance to talk about all these different topics. And today's is not a super fun one all the time, but it's one that has to be discussed because it's such a hot button issue, which is looking at sort of delinquency rates that exist within the cannabis industry, downward pressures that are in some markets creating declines, and what do we do about it? So we're not here just to tell a sad story about these topics. We're really here to talk about what is the situation on the ground, what are things looking like, and how are you guys working at both a macroeconomic level as well as with individual businesses in these markets to really overcome these challenges and keep things moving forward. So, Beau, I can't remember exactly how long ago it was, but it's not been too long that you put out a delinquency report that I know a lot of people all over the place had a chance to read. But why don't you give us the top line for those who may not have read it or just probably read it and can't recall?
Sure. We published the report in March of 2024.
Okay.
So a year and a half ago. Um, and Basically what it said, it was based upon surveys, a national survey of all of these cannabis businesses from um, cultivators, processors, distributors, retailers, and like. And it showed that out of the $28.8 billion at the time that was being derived in terms of regulated revenue, there was $3.8 billion in delinquency. So that's about 1.6 months of delinquency. So the way that I view this is uh, companies, especially at the processing and the cultivation level, they have to run a 12-month business off of 10 months worth of cash flow. And so that's the headline. And there's a lot of details that go into that, and a lot of the reasons why, both at the state level and the federal level, that are driving this accounts receivable crisis in cannabis in the U.S.
Yeah, and I'm wondering if either one of you have seen this. I certainly have an opinion on it, but I'm going to hold it because I want to ask from you all if you've seen this as being primarily a US issue, or do we see this as a cannabis industry issue, regardless of nation, regardless of continent?
I mean, I guess what I would say is because cannabis is such a new industry, and folks tend to not be as organized as they should be in their business visions, business plans, operations. It's a new industry, right? And so I think we have to make sure our companies are professionalized and that we're operating as a company. Otherwise, these are the types of things that happen. A lot of vendors and suppliers are using their consumers and vice versa as short-term banks, right? And so if they are not operating their companies properly, then what happens is it obviously goes either upstream or downstream of the supply chain and affects the whole industry. So I would say that right now I don't see um a lot in Europe or overseas. Here in the US, I think in some ways it's getting better, but it's very difficult to say. I can elaborate on that a little bit more probably a little later.
Yeah,
Yeah,
I
no,
would
that's
agree
fine.
with that. I think it's a US issue because of the lack of federal legalization. And when you don't have access to banking to the extent that normal businesses do, and you don't have access to bridge loans or typical financial instruments that other ordinary businesses do, then it creates the environment for this type of activity. And in
Yeah.
addition, there's also this, a lot of this has to be borne on not just the federal lack of guidance, but on state legislatures and regulators, because they have oversaturated the licenses, they have oversaturated the supply, and as a result, the regulators and legislators have put the industry into economic distress. And when you're under economic distress, you got to figure out how to make ends meet. And this is the result of making ends meet.
Yeah. Do you see any submarkets that seem to have figured out at least part of this, where they say, well, we're gonna, in theory, tax a little bit less, control licenses a little bit more, and create an environment that allows, businesses to survive a bit better, and then the result is we see fewer delinquencies? Or at the moment, is this just pretty much across the board and we've got no good examples of places to do business and on this topic?
Well, what I've seen is that some states have attempted to go to a cash basis or, cash on delivery. Washington State tried to implement that. New York, I think, has either implemented or is in the process of implementing those types of policies. But in reality, this is a nimble industry, and people
Mhm.
find a way around those roadblocks. And
Mhm.
so there's still, even in those states where there's good intention from a regulator perspective and trying to protect especially small businesses and especially cultivators and processors, it's having less than the desired effect.
Okay.
Yeah.
All right.
I mean, I guess overregulation in any area can definitely hurt our industry, as we've seen. And yeah, unfortunately, whenever regulators get involved in this type of um issue, I've seen it, actually affect business owners. So when they try to put COD terms on retailers, and they can't quite, it affects their business. So a lot of the retailers actually were quite upset when these regulations were trying to be passed, and it just doesn't give them a lot of flexibility with businesses that are already quite cash lean anyways. And it's really a timing issue. As long as they're not kicking the can too far down the road and it's a 30-day timing issue, then they should be able to have terms, right?
Mhm.
And so I think forcing folks to do that by regulators is makes it difficult on some of the businesses, you know?
There's
Yeah.
also been some policies that have had an adverse effect on cash flows. For example, in Oregon, you can't get your license renewed unless you're caught up on all your taxes or
Mhm.
are in some type of agreement with the departments of revenue. But I mean, if you're behind on your personal taxes, then you shouldn't be prohibited from a business license, or there are like um, pet tag licenses. And so if you're
Mhm.
behind on that, then does that disqualify you? And so
Mhm.
I use the pet license example as to show how extreme some of these policies are. Because what they're doing is you're getting behind in your taxes, which is not uncommon for
Right.
a lot of businesses. The ones that are more disciplined, they're better. But if you get behind and you lose your license, then you're done.
Yeah.
And
Yeah.
when you're done, if you're denied a license, then because of the way that you have lack of finances in this space, then your people will say, well, we want to cash in our personal guarantee on your loan. And so not only because of cannabis taxes, not only do you lose your business, but then you lose your house and you lose your
Right.
farm. And so all of this stuff, although there's probably good intention about it, there's it's just having the an adverse effect on the industry overall.
Yeah, I do think when I look at some of these policies from regulators, it's almost like they're in such a silo, just focusing on their exact thing, that they lose the perspective of, hey, the normal financial tools that would help people to navigate this aren't always available. And since they're not available, your little policy here is actually tanking not only this business, but could also then have this whole trickle down effect, right? Which is, I think, what we're seeing, or what you were seeing when you were doing your report in 24 on delinquencies, which is the cascade effect, because the mitigation tools aren't in place for people to manage through it, becomes impressively horrific. When really looking at it. So,
You know, in our report, we mentioned the fact that only 24% of businesses nationwide were profitable. And the majority of them were barely breaking even. And then, but an increasing amount are, you know, losing money. And so when you're losing money or you're very, very tight, then you're trying to figure out ways in which to pay your bills.
mhm,
And so the macro environment is showing up at the micro level from these delinquencies. And so when you have a tax policy or a cash on delivery policy or something like that, then that's just a band-aid. And so I think what policymakers and legislatures need to do is they need to look at their overall health of their industry, and then they need to say, okay, what can we do to fix it to make sure that it's a better environment for the business operators so that they don't get behind in their taxes and get behind in their payments and create this economic distress throughout the entire system.
yeah,
Yeah, and I mean, you know, the illicit market, the pressure from operators on by the illicit market, not just in the U.S. but overseas as well. Obviously, in Europe, it's everywhere. Um, you know, it happens in this industry, obviously. But if regulators were, I think, a little bit more concerned about going after or at least bringing into the fold the illicit operators, I think that our licensed operators would have a little bit more of a fair chance because that's who they're up against. Um, obviously.
mhm,
Yeah.
yeah. So outside of, regulators waking up,
Mm.
which seems a bit of a challenge, depending on the state in particular.
Well, the
You know,
regulators are going to say that they're beholden upon the legislature, so there needs to be some education
totally.
at the legislative level. Although
Yes.
the regulators, that's an easy out for them, and they're not necessarily like I'm hearing feedback from different organizations that the regulators are being advised to only focus on public safety and not market health and market indicators. And so when I hear that, I'm like, yikes, that's probably not going to help address the systemic issues that are associated with that are causing all this economic distress. So I had to interrupt you there. I'm sorry, but I just
No,
wanted
it's
to,
okay.
highlight the fact that a lot of this is legislative fixes and a lot of it could be also regulatory fixes as well.
Totally agree. But what I was gonna ask Rachel was, knowing that businesses exist in this situation where the fix really could go a long way on the legislative and regulator side, um, these businesses still have to exist and they still have to navigate it regardless of that scenario. So,
Mhm.
what are your clients doing, or what actions are they taking to try to, mitigate delinquency, the effect of delinquency in their business, and to avoid some of these market declines? And I think California is a great example to use because all of this stuff certainly has existed there.
Yeah. I mean, we saw herbal obviously go take a lot of the industry down along with themselves. I think it was in 2023. And,
Mhm.
I saw some companies personally affected by them, manufacturers that were affected by them not being able to pay the other manufacturers. So some manufacturers actually went out of business. So that had a
Mhm.
huge impact. And essentially, herbals issue was collections and not realizing that they were so far behind in their delinquency and collections. And so everybody learned a big lesson from that. I think it was 2023. And so now I see a lot of people are actually doing COD, or they
Mhm.
know at least they're good operators that will pay. They're looking at their customers and they're actually ranking their customers. They're paying more attention to them. They're not just sending product out the door without knowing KYC, know your customer, is always very,
Mhm.
very important. And that happens in this industry as well. The better you know your customer, the more you'll probably get your cash flow back. And
Mhm.
so I also see this as what I've encouraged is that feedback loop that we talked about in another episode is from the sales rep is usually very, very motivated to go out there and sell because they get paid on commission. But the trick is they only get paid on commission if the customer pays. So you should always pay your sales reps on cash basis. Some people don't realize that they're paying their sales reps on, when the order ships. So number one, bring the sales reps into the fold and closing the loop on making sure that the consumers can get collected on, right? And
Mhm.
so if you have any issues collecting payments, and I usually bring the sales reps into the fold and I say, hey, you have the relationship with the customer. This is your customer. Talk to them. Then you have to talk to production and let them know, hey, or order fulfillment, make sure they're not fulfilling orders for customers that are on credit hold. So then there's some
Mhm.
coordination there with the accounting department. So you can see it's a whole operational system. So the businesses need to have that feedback loop. Communication is really key, and put a credit hold on customers as soon as they stop paying. But generally, again, it's like it is also KYC too.
Yeah. Yeah, I know
Another thing
we've
on there
seen
is,
this all throughout the supply chain too. Just one note, that advice is great advice, no matter what industry you're in or what business you're in,
Mhm.
right? Is understanding just because you like the idea of this customer doesn't mean you should keep sort of dragging that out if they stop paying or such. It doesn't, I think a lot of people have a hard time making that mental cut, right? We
Mhm.
sold it, we got it. Now it's shipping and going out there, and the deal is partially done, but not all the way, and then the payments stop. You can't be so emotionally vested that you don't make the right business decision. You don't have to be cold about it with your clients and all that, which I think is the other extreme. People just get mean. But there is this sort of pragmatic business approach that needs to happen in the middle to protect the business, but also sometimes to protect the clients from themselves. I mean, some of these companies get so strung out on credit and terms and everything that they're so deep before they ever even realize it that there's no chance they can come back from it. So sometimes you're
yeah,
helping the
I think
customer.
setting up indices is really critically important. And when I was in the high tech industry, in the semiconductor industry, Apple would push back on customer concentration. And so if they were too beholden upon a single supplier or just a couple of suppliers, then they would look to diversify their supply base. And so because they felt a risk by having too much customer or supplier concentration. The same thing, same concept applies in cannabis. If you have too much of your income coming from too few customers, then you're at greater risk than if you were diversified. Now, on
Yep.
the other hand, in terms of solution, when I've traveled around the country and talked to different business entities about this, those folks that have run small businesses and are affiliated within a community, and the community is relying upon one another, and then they're developing essentially a co-op or developing a vertically integrated system without it being formally under one organization. Those that have worked together within a community have managed better than those that have not, because they
Mhm.
have that relationship. They're all dependent upon one another. they can communicate, and they actually have greater pricing stability, and
Yep.
consistent demand and the like. So it's about community and setting up the indicators and knowing when you have to put your foot down and say, hey, enough's enough.
Mhm.
I'm going to use that as an opportunity to plug the GCNC, because the whole notion of having right community and businesses supporting
Mhm.
each other, but also knowing there's consequences if you fail to deliver, is important. And frankly, it's kind of what we built the whole framework on. And I will say, in emerging markets around the world, I have seen exactly what you're talking about when there aren't a whole lot of options for supply at the beginning and you're just starting. Those markets where you're really dependent on just one or two groups, and then one of those two groups fails, right? The whole market collapses for oftentimes years. Whereas if you can come in and sort of build in the diversification from the start, even if you lose one or something goes awry, there's enough there to help build that base. And we're certainly seeing that in an ongoing manner in South America and Asia right now, and even sub-Saharan Africa. These are all the markets which are oftentimes in these early stages, and facing a lot of these challenges now, that the more we can as an industry around the world help support them with some diversification opportunities, they'll come along a lot faster, which will be good for all of us. So
Yeah, and I
What
mean it
I
protects. Oh, sorry, I was gonna say it protects the new entrants into the market or the curious folks that wanna, and investors and investment. If they're thinking about getting involved in the industry, we have to have a network of people that can be relied on. So I think that's key. It protects a lot of people.
I found that in doing the research for the delinquency report, those that were hardest hit were the small business operators, but in particular women-owned businesses and minority businesses. And they just didn't have access to the type of capital that other white business owners had. And so they were the ones that tended to form the collectives and form the community, so that they could work and support their own industries, right? So minority industry, business operators, indigenous business owners, and women-owned businesses. So once they realized that there was a force in their community, then they started benefiting greatly from it. And
yeah.
it showed up in the reduction of the delinquencies as well.
Mhm.
Yeah. And I mean, if you look at, we have partnerships with the Indigenous Cannabis Industry Association, and we work with Women Grow, and we work with the European Industrial Hemp Association and the EU Medicinal Cannabis Association, and um, we work with Chiba Africa and their whole network of education programs and all that. And the reason that we always try to do that, and this is just a vote of enormous support for what you're saying, is because even within those networks where they have communities, they don't always have all the resources. And so the more we can plug all these different groups together, um, the more symbiotic it works around the world and throughout all those, and creates a level playing field, which I think is pretty much what everybody wants, is just, give me the opportunity to compete on an equal level with everybody else, and then let the best business win. And
Mhm.
hopefully that means multiple businesses win, because there's always a lot of them, right? It doesn't have to be a winner take all scenario. As a matter of fact, I would argue in cannabis that's a really bad idea, because we're not in a point right now where that makes any sense at all. So
One
Right.
surprising result from that delinquency report was that multi-state operators tended to have the greatest percentage of delinquencies. And so a lot of times you would think that if you were vertically integrated, then you would be able to manage your delinquency within your organization. But what I found is that in order to expand their market, they relied on other MSOs in order to do so. and then the MSOs wouldn't pay the other MSOs, and so they had a huge delinquency as a result. So I found that to be really fascinating.
Hmm. That is interesting, especially that they are the now is that in total I can understand why that would be in total currency, but was that as they were the largest delinquencies in percentage terms as well?
Yeah, they were. No, I'll have to look at that. Definitely in terms of dollars, and then in percentage of total, but
Yeah,
not, yeah, not
okay.
percentage of the operators that were behind, or you know,
Interesting.
yeah.
Yeah. Well, and they have such a terrible downstream effect when large MSOs and LPs um, either go belly up or have a hard time paying their bills. And which leads to the earlier topic, right? Like other businesses further downstream can't take the hit. So, um, Rachel, when you've been looking at companies, whether in the US or Europe, um, have you seen in especially the European markets, sort of any education happening, reflection on what's happened in Canada and the US and this, and then people are adjusting their behavior to manage businesses better there since the markets came on somewhat later, or is everybody still thinking in their own silos?
So I think we're talking about like whether businesses are operating a lot better in the newer
Mhm.
markets. Yeah,
Yep.
I mean, I think so. I think when I compare, maybe it's just a culture thing, but when I compare more West Coast businesses, we seem to be more renegades and less business oriented in some ways. It's just, you see a lot more companies that um, have have say shareholders, but they're actually not there a lot more like backroom deals, kind of, I guess I would say, more
Hmm.
than memorialized operating agreements and things. And also the business operations aren't always kind of planned. What I do see more on the East Coast, and it might be an East Coast thing or Northeast per se. I'm also from the Northeast, so people are thinking ahead. So even the smaller businesses are a lot more profitable. So, for example, I have some smaller dispensaries out in New York, and they're doing very, very well because they thought about this and they're actually interested in the numbers and they are operating the business like a business. um, and I'm not saying all West Coast folks are renegades, because I've seen a lot of very organized, structured businesses. I don't know if it's the West Coast blood. We're
Hmm.
just a lot more adventurous in some ways, and a lot more risk takers, and so there is a little bit of nimbleness that you sacrifice by being by having a business plan, operating the business in a certain way. So if you
Hmm.
can stay nimble while you're operating a business, that's great, um, without throwing it all out the window. So I guess what I would say is I see a lot more sophistication coming through in these newer businesses, especially in the Northeast area, and actually in the South and say Florida. Um, so it might be a geographical cultural thing. I'm not sure. It
Yeah.
could be that we've just learned our lessons as the markets matured a bit more. I don't know, Beau, what you think about that.
It would be nice to think that we could learn things as we go. It doesn't always
Right,
happen, but let's
right.
hope. So yeah, and it's been a great topic today. I think, all of the different nuances that occur throughout all of these markets create slightly different scenarios, regardless of what state you're in, what country you're in. But certainly this recurring theme of planning, looking ahead, and making sure that you're operating your business like a business, and is doing as much as you can to stay up on your taxes always helps. And so we're at time, but before I close it out, Beau, you looked like you had something to throw in there, so I'm not gonna just jump and not let you close out with a comment.
Well, I think right now the phenomena East Coast, West Coast part of that is associated with the fact that they're newly deployed states, and there's not as many licenses issued. But once they mature, then they tend to settle down to where there's a lot of licenses, and that's where business execution and discipline comes into play.
Yep.
But I'm starting to see now in the older states where um, the smaller operators are just being bled dry, and they're not able to sustain on a long-term basis. And so you're starting to see a lot of wealth destruction, a lot of business failures that are being sold to better, larger, more well-funded entities. And so that's kind of a resetting of the industry. Now, as doom and gloom as that sounds, there is kind of a natural course of things in industries where there's an influx and then consolidation, another influx and consolidation. So I think this is more a matter of the end of the race to the starting line. And so that's ended. And now people are at the starting line just to begin the race. I think that's where we're at.
I think it's a great analogy. I certainly saw that early in my career in the late 90s with the tech boom as well, right? So um, I like the idea that we have been racing to get to the starting line, because it furthers what I tell people often, which is you're not too late to jump into the industry. As a matter of fact, it's a great time to do so if you come in with eyes wide open, and you know your customer, and you're willing to operate a business like a business. All those things that you guys have been offering up today and throughout the last several episodes of Cannabis by the Numbers. So I want to thank everybody for sticking with us through the series. It's been a great discussion, great topics. Thank you both for carving out the time to be with me today and talk about a topic that is frankly pretty tough for some folks to want to deal with, but it's one of those that you have to deal with, and we have to deal with as an industry to make sure that things continue to move forward. So thanks everybody for joining in. Make sure you subscribe if you haven't. Thanks to Whitney Economics and Verdant Strategies for sponsoring this whole series. And until next time, have a great one.
Thank you.
Thank you.